Hi friends, welcome to A to Z Learning channel. Today we are picking up the topic of IPOs, initial public offers. You would agree that currently there are a number of IPOs that we are seeing coming in the market and raising a lot of money. Most IPOs are getting significantly oversubscribed as well. Retail investor, high net worth individual investor, or even institutional investor, they're all crazy about investing in IPOs. Some of the recent IPOs have been oversubscribed by almost 100 times. I believe that it is always a sign that for us to properly assess whether these are all genuine, legitimate businesses which should be valued at the level at which they are valued as part of IPOs. And the initial rush that we are seeing as soon as these stocks are listed, their valuation, their stock prices go further up. Nobody is paying attention to the appropriate valuation, is always the risk. So in this video, we will help you understand the report card of the recent IPOs, and we will also share with you some of the hard facts so that as a retail investor, you can determine whether you need to be bullish or cautious when considering any investment in the IPOs. So without any further delay, let's start our video. So as I said that my first objective here is to present you the report card of IPO investment. This will be all factuals. These are the all relevant facts that you need to know. You may have heard about some of these facts through the various media channels and newspapers, but in this video, we have tried to compile everything for your easy reference. So let's start with the report card. So what is the current financial year suggesting? You won't believe that we have only completed 4 months in the current financial year, which is 21-22. In this 4 months, already there has been 12 companies which have raised significant amount of money through IPOs. The amount that they have raised so far is close to 27,000 crores via IPO. That number in itself may not make any sense to you, but when I kind of throw in some of the numbers, like, you would be surprised that last year, in the whole of the year, IPO collectively raised just over 31,000 crore. Year prior to that, only 20,000 crores was raised. And if I go back even one more year, only 15,000 crore was raised in the whole year. Whereas in the current financial year, we have already raised 27,000 crore in the first 4 months. And let me also remind you, there are a number of new issues, there are a number of new IPOs that are approved and lined up for the rest of this year. And you won't believe the amount of money that those IPOs are going to be raising in the market. They're going to be raising close to 70,000 crore. So if all goes according to the plan this year, we could be looking at this year all IPOs collectively raising close to 100,000 crore, which is a mind-boggling number. And if on an average each issue is getting oversubscribed by even 10 times, you can imagine the amount of money that will be chasing these IPOs during this year. So that's sort of kind of the context in terms of what is happening in the current year. As I said, historical context is important. Last time we saw a year like we are experiencing this year was 2017-18. In that financial year, collectively, all IPOs put together, the money raised was close to 82,000 crore. And this year, if all goes according to plan, as I said, it will be close to 100,000 crore. So 17-18 was the big year, but what happened after that is the key question. And we'll come back to that in a minute. Let's also understand the fact that why there is so much demand for the IPO this year? Is it genuinely stock markets are looking favorable? The valuations are low, that's the reason it's attracting new investors, or what's going on? I think there are a number of things that are happening. First of all, the lockdown has allowed many people to be spending more time at home. Everybody's saving time in terms of their commute. And when they are sitting at home, we can see from the new brokerage account data that number of people have opened brokerage account with leading brokers in India, which means there are more people now trading in the stock market or investing in the stock market. Other big change that has happened in last 2 years is that UPI, which is a very convenient way of applying for IPO, subscribing for IPO, has become the most preferred way. And that's a clear indication that the retail investor is participating in the IPO boom at highest level. In fact, 42% of the total subscription recently has come from UPI. So that's the other change, the technology change that has come in the recent past, which is enabling a lot of new investors to be subscribing IPOs. So all these factors put together is resulting into IPO, uh, IPO kind of market being very, very bullish. Now let's understand from a report card perspective, what is the main reason for which the companies are raising money through IPO in the current financial year, which is 2021 to 2022. First of all, when I look at the objectives of the IPO of all the firms that have already raised money, so 12, and the new that are going to be coming, about 40 new companies which are going to be raising money in the rest of this year, I look at that most companies are raising money by way of offer for sale, which means either promoters are reducing their stake or some of the early stage investors are partly or fully exiting from their investment. It's a low proportion of the issue which is going towards the fresh capital for the companies, which will be used for the expansion or further growth of the firm. And looking at these reasons, I feel that promoters and the investors are rushing to the market because market's at all-time high level. Retail participation is also at all-time high level. And some of the technology changes like UPI have made it so convenient for people to subscribe for these IPO. And some of the existing investors, promoters are seeing this as their golden opportunity to get the best valuation for their investment. And that's probably the main reason why there is a total rush, why there is urgency of such number of IPOs that are hitting the market currently. But as you would appreciate, while a normal cycle of some of the early investor exiting and the new investor getting chance to invest in the growth companies of the future is always a good sign because that cycle is important. But given the scale at which it is happening in the current financial year, that's worrisome. If such number of kind of existing investors are exiting and most of the money, like, or majority of the money is raised purely to allow existing investor or promoter to reduce their holding in the company or cash out their investment, then that's not a good sign. That's not a good sign because there is always a risk in these sort of environment that retail investor is probably entering or subscribing these investments at a very, very high rate. So if there is a correction in the recent future, then retail investor may get stuck at these valuation for a very, very long period. And I think that's very important for retail investors to keep in mind. Now that sort of kind of takes us nicely to the section where we will help you understand what is our overall assessment. So I think first of all, the assessment is there are some good part and then there are some part which need careful consideration from a from a retail investor perspective. What are the good parts, first of all? The first good part is that these IPOs are providing opportunities for retail investor to invest money in the companies which are strong growth, which have got strong growth potential in the future. And that's if these companies are not going to come in the IPO or not going to be raising money through the IPO, retail investor we will not get the chance to participate and invest in the companies which are going to be tomorrow's successful story. So that's really good that there are more IPOs coming. There are more opportunities for retail investor to put their money in the companies, in the businesses in which they have got conviction for the future. What are the then worrisome factors? What need careful consideration? I think first of all is that the valuations are very, very high. There are, again, I don't want to name the companies, but most companies which are relatively speaking newer companies are getting valued um, at the IPO price pretty much in line with some of the long established companies which have got huge scale, many times scale in terms of revenue and profitability. But from a valuation perspective, they are the same. They're enjoying the same multiple of earnings that some of the established companies with a strong brand image, strong product portfolio are enjoying. And that's worrisome because some of these things are new companies could become like as big as some of the established companies are, or some of these new companies may struggle. So, and if you're paying the valuation at the price which is already equivalent to some of the successful company, that's quite alarming for a retail investor. But second thing is that because most IPO issues are subscribed, oversubscribed, therefore most retail investors are not able to get enough allocation or any allocation for that matter as part of IPO. So what they do is they rush on the listing day or within couple of days of stock listed in the market and buy at whatever price it is available. And we have seen recent all the 12 issues that have come in the market this year, they all have commanded huge premium on the listing day. Some have, like the most recent one, which was last week, that was listed almost 100% higher than the IPO price. And IPO price itself was quite ambitious. And then imagine it is increasing by almost 100% on day one or day two. And that's a worrisome fact. So I think this is what people need to kind of keep in mind and be aware about that. Let's not rush to kind of apply. It is the time when, as a retail investor, you need to be extremely cautious because valuations are going crazy. There are certain industries, if any industry is in the life sciences or pharma or chemicals, they are the darling of the industry. And people are willing, retail investor particularly willing to pay whatever the price to get hold of the shares. And that's quite worrisome. I think fundamentally you need to still be conscious that whether what is the strength of their balance sheet, what is the strength of their business, how quickly they'll get to the level of revenue and profitability that could command the valuation that they are having currently. So you need to be very, very careful. So our overall assessment for retail investor is that these are tricky times. There is a high probability that if you're not careful, you will get stuck in these IPO investment at a very, very high point, which means your opportunity to exit and make money uh, will drag you for many, many, many years in the market, and sometime you may not even recover your investment. So therefore you need to be very, very careful in terms of which company you choose, which company you to apply, and what level of premium you are willing to pay if you want to buy on day one or day two of the listing of a new IPO. So I hope this quick video has been helpful for you to understand the report card of IPOs this year, and also the assessment, our assessment that we have on these IPO purely from a retail investor perspective. If you have if you have an alternative view on the IPO that we have shared in this video, then please do let us know through the comments. What do you think about the IPO investment currently? If you agree with the content that we have shared and the view that we have shared with you, then also let us know by liking our video and sharing our video with your friends and family. And last but not least, if you've not subscribed our channel A to Z Learning as yet, please do subscribe, become part of our viewers family, and become part of the mission that we have set for ourselves of simplifying the complex world of financial products and services. So thank you so much for watching our video, and we will see you in our next video. Thank you.